Scott, feels like every time something happens, you and I get to talk. So the most recent news was 30 minutes ago, but this definitely is probably the most critical word in this particular moment in time that we can do to provide the tools to understand this technology. For most of the time, funny enough, Tether is trading above the dollar. We can only take care of the primary market.
There's a famous saying that there are two certainties in life, death and taxes. We could probably expand that to another certainty in crypto, and that is fear, uncertainty, and doubt surrounding Tether. Now, every time we see another false Tether depeg story or a story about an attack on Tether that they're going to collapse, I just call Paolo Ardoino and we have a conversation about it. That's exactly what we did here today. There's some new revelations and some amazing takes in this awesome conversation.
Let's go.
Another day, another Tether controversy being made up by the crypto community, seemingly, but you guys just made a huge move towards transparency. Can you talk about FOIL?
Yeah, sure. Thank you very much, Scott. It feels like every time something happens, you and I get to talk. So, okay. Of course, the day started with some market movements. We will talk about that later. But the most recent news was 30 minutes ago. Tether announced that it dropped its opposition in the FOIL matter. FOIL means Freedom of Information Law. Is a thing in the US that allows, I think, journalists or even the wide public to ask to regulators certain information related to disputes, right? So CoinDesk asked that information to the New York Attorney General 2021. Tether opposed on this matter to avoid that the information of our customers was going to be released, and also opposed on the depth of the information that was included in this report. But look, 2 years passed, that this information is old, but also that information contains our banking statements, right? The bank balances, the name of the banks that we have been using for the last years. It contains a lot of information about our policies, our KYCML policies, our transparency policies, our risk management policies, investments, and so on. And contains also some information about the widely spoke commercial papers. So, in these days, in these times of high uncertainty and FUD and the market craziness, and we thought, okay, we have to do something. We have to show that we are different. Let's put this to bed, right? We don't have anything to hide. First of all, that information is super old. Tether changed so dramatically since then. But also even that information shows that Tether was always backed. That information was, in fact, reviewed by the New York Attorney General for 2 years, right? So for 2 years, we kept sending this information to the New York Attorney General. And so we thought, okay, we have to release it. We have to show that we are, the bigger man in the situation. And it's a good day. It's a good day because it will just reinstate the fact that, transparency is king. That it will just set up the bar higher for everyone else. So I find it exciting.
I think it's really exciting. Does this put to bed the questions you've had about audits in the past? Is this as transparent as having an audit if you're just releasing your statements and your books?
Well, I think so this is a punctual information in a specific moment in time, right? So an audit is a more and more ongoing thing. But I think one thing that I'm a bit sorry about of this information coming public, that is one of the reasons why we opposed in the past, and that, in the end you have to take some decisions, is that that information contains the list of terminated customers from Tether, right? So Tether over time terminates customers because either they're US people, so we can observe them, or for different reasons. And so we hope that the CoinDesk will not release that the list of individuals publicly, not because we have something to hide, right? So it's not about transparency, right? If they do it, it's not our problem. It's the physical security of these people that is not,
Of course.
is not great. But we try to warn CoinDesk. We ask publicly to not do it. We'll see what they will do.
Yeah. Okay. So the other news that we've been talking about today, obviously, is this curve pool imbalance that's once again triggering people to talk about a Tether depeg, causing some people to speculate that somebody knows something that maybe we don't. Seems like the usual story, but can you talk about what's happening there specifically?
Yeah, well, this is the good old story that we talked always about each other. So recent today, and think about it, right? So first of all, it's quite interesting as a coincidence that this happened while our information was shared today with different journalists. So related to the foil, right? So FUD has always interesting timings, you could say. So anyway, this morning, around 5 a.m., I think CET, there was an aggressive move on some DeFi pools and on some centralized exchanges that would see USDT being sold subpar. That we have seen that event happen a few other times in the past. Always related to public attempts to cause panic in the market. We always came out from those situations with the flying colors. Remember, the first time it happened seriously was just after the Terra Luna event, 2022.
Mm-hmm.
Yeah. And Tether was able to redeem $7 billion in 48 hours. That was 10% of our reserves, and $20 billion in 20 days. That was 25% of our reserves, something like that. And of course, as we see much less pressure today in the market, the volumes of these sell pressures were quite smaller than in the past. But still, nevertheless, you could see also reported publicly, right? You could see big whales borrowing Tether and dumping in the market to cause further down pressure. That caused, of course, market makers to step in and doing the arbitrage work to buy cheap Tethers from the market and redeem them. And that's completely fine, right? So for us, the thing that I always say is it's a test, right? It's a stress test. And a stress test is good. I mean, I wish banks would go would be subject to the same stress test, because if you see your 10% of your reserves flowing out the window in 24 hours, then it means that, and you don't have any problems, it means that it's good, right? People see that is happening. People see that your banking is able to fulfill the redemptions. So it's always exciting when it happens. I think I'm just sorry that it always comes with a lot of FUD and misunderstanding, misconceptions around Tether that could harm less sophisticated people, right? So I saw your tweet today where you're explaining how the peg works, right? So the peg event happens only on the secondary market, right? On the exchanges, on DeFi pools. But Tether always redeem all its tokens at $1, the face value, right? So when a customer comes to us, we pay always $1 for each token. And so that is an important definition, right? We can only take care, as Tether, we can only take care of the primary market. That is our platform, that is tether.io, right? But we cannot control, we are not involving ourselves, and we cannot also by law, right, involving ourselves on the secondary markets. We cannot touch them. And so that is really important. There are market makers that will fulfill the market demand. That is also happening when, for most of the time, funny enough, Tether is trading above the dollar, and you don't hear so much news, right? But that means that in that moment, the traders or the market has a lot of demand for Tether, so there is an upward pressure. When either there is an attack or there is less demand, there is downward pressure. It's market dynamics. Market dynamics, it works pretty well so far.
Yeah, and this depeg, I'm throwing up quotes for anybody who's listening, but this depeg was a fraction of a percent, right? I mean, USDC last year at Silicon Valley Bank was trading on the secondary market at 87 cents, 88 cents, 90 cents on the dollar. We're talking about 99 point something today. So a totally different scenario.
0.3% was the maximum of discrepancy from the dollar. And yeah, again, we have seen in the past some attempts like this. I think that now market makers are more equipped to act quickly because it's good money for them, right? So they know that we are back, so they just are happy to buy cheap tethers and redeem them. So it's a good showcase on how healthy markets work in a certain way.
Do you have any concern when things like this happen that in this regulatory environment with so many people having a spotlight on the space that it could then have them focus more on you? Because I also don't think a lot of your regulators and legislators and governments understand the nuance that we just discussed. They probably, like everybody else, just read an article and go, it's depegging, it's not safe.
That's a great point, right? So the role of Tether is meeting with all regulators or all lawmakers to explain how exactly the market works, right? So it's not necessarily every single regulator understand all the dynamics of what is happening in the crypto industry. They don't necessarily understand the difference between primary and secondary markets. So it's important from our perspective to give them the tools to understand exactly how it works and give them the data, right? Because when you look at the data, when we show how our redemptions work, when we show when a customer comes and redeem $100 million, we show them, okay, we receive that money, we pay that money out. So we receive in Tethers tokens and we pay the money out. So they can see all the process. Then they understand, they are much more assured. But this definitely is probably the most critical word in this particular moment in time that we can do to provide the tools to understand this technology.
Are there doors open in every single country for you to take those meetings, or are there places where you can't get in the door? I mean, we know for a fact Brian Armstrong can't even get a meeting with Gary Gensler, who is the head regulator in his own country, right? So is it problematic for you to even get the opportunity to educate those regulators?
Well, I would say, I think the SEC case is particular, right? So it's kind of saddening because it feels just wrong that a country like the US that historically has been pushing innovation forward, right? So I'm Italian. I was living in Europe. I've been living in Europe for all my life, right? And in all the movies, US has been the driving force of innovation, right? In every single technology. And then, for this seems an exception, a weird exception to me. And also the capital that there is in the US, right, to support this technology is a shame that is happening this way. But, I think regulation should have been happening proactively rather than regulation by enforcement. But in general, what we are seeing, right, so also it happens that so I talked to regulators both in Europe, but also in the US, and everyone is always excited to talk to us. I mean, it's crazy enough, but they hear so much about Tether that when the CFAs, when they understand how it works, they of course ask questions, and also really hard and thorough questions. Well, that's their job, right? But in the end, we end up the conversation in a positive light.
I think that makes sense because once they understand it, they understand that it's actually a pretty boring business.
Yes, it is. It's a business that doesn't require so much, manpower, right? So we are a company that is quite lean. We have 60 people in the company, spread all around the world, and it's important because all our customers are all the emerging markets. So we are so spread in our users rather than customers, right? Because our customers are the primary market customers, but our users are like in Turkey, in Argentina, in Brazil, in Venezuela, in Vietnam, everywhere, right? So in Africa. So we have people around the world. We show how careful we are in our risk management, in our liquidity management, and so on. So I think is exciting. Really, I think Tether since 2 years ago took amazing steps in terms of transparency, and we learn a lot. Also, when I talk to regulators, I never hide the fact that we have been we settled with the New York Attorney General, we settled with the CFTC. There is, we are not ashamed, right? So we know our history. We know that we always want to do better. We are fighting for this technology, for Bitcoin to become like a resilient tool for people, a resilient financial tool for people. So we decided that we have to put everything that we have in this thing.
I can't remember if we've talked about this before, but I was pretty astounded when I was looking into, well, the volume of Tether being moved around the world is absolutely astounding, but I was actually pretty surprised to see that the bulk of it was happening on Tron.
Well, it makes sense, right? Because keep in mind that Ethereum fees are pretty unpredictable. You just need like a guy minting a few NFTs that the fees are skyrocketing.
Blows up the whole network for 2 days.
Exactly. And so keep in mind that maybe $5 are not much for, well, are still a lot of money for a single transaction, but maybe an European on a person living in the US or Canada can afford those, right? But for a person maybe living in Nigeria, or a person living in another country, like they cannot afford it, right? So Tron has much lower fees. And keep in mind one thing: Tether is a centralized stablecoin, so because it relies on the banking system using decentralized transport layers, but it remains centralized. So the fact that it uses Tron just because it's fast and cheaper than Ethereum, it doesn't affect its decentralization, because anyway, Tether is not decentralized in the first place. Tether is centralized.
Yeah, makes perfect sense. I think most people just want fast and cheap, and they'll go wherever they can get it. Were you at all surprised, because I was, that in the Binance suit filed by the SEC that they named BUSD, a stablecoin, as a security?
Well, I mean, I don't know exactly the mechanics of BUSD, but as you could see, USDT was not named as a security. So we take a lot of pride in differently from others. We make sure that we do the things by the book, and that I think is being recognized by regulators.
I think so. When you meet with the United States, with the government, regulators, companies here, do they understand that Tether is effectively helping the dollar and helping dollarization, or do they still see it as destabilizing? What's sort of the opinion there when you meet with people in general? Because, I mean, you guys are a huge buyer of United States treasuries, right?
Yeah, I think we have, so as direct exposure right now, we have around 56 billion in US treasuries, and with indirect, I mean like through the money market funds we are invested in, we are like 60 and something billion in US treasuries. And so when I explain our portfolio composition, I also explain that we are not here trying to steal the work from the banks in Europe or in the US. That's true, right? So I don't have to preach to the Pope, right? So Europe and US has pretty good financial infrastructure, right? So and banking infrastructure. Most of the people have a bank account, but there are places in the world where people don't, like 70% of the people don't have a bank account, and because the banking infrastructure is poor, they are forgotten or non-interesting for the banking infrastructure. And so that is where we thrive. So in a way, we are not competing with the US and European banking industry. So we are not stealing jobs. We are not stealing fees from them. But we are also tackling a market that is really important for the US and is helping the hyperdollarization. And this knowledge, this information is really reasoning with the people I'm talking to, because it's seeing this light, right? So always, of course, when you see this disruptive technology, you as a lawmaker or like a person like as a lawmaker, you want to make sure that you protect your companies inside your country, right? So you want to make sure that you maintain the healthiness of these companies. But actually, we are not putting them in harm. We are actually creating more and more value for the US dollar. And I think is the big difference that when explained just makes sense.
So we've seen a lot of talk about legislation around Bitcoin, crypto in general in the United States. When you really zoom in on it, it seems like stablecoins are the first thing that they're keen to regulate. I don't know if that's because it's low-hanging fruit, it's something they understand and it's easier. But do you think that we could get some stablecoin clarity in the United States in the not so distant future? I think for me, I think anything in crypto, that's the most likely thing we may see some legislation around.
Yeah, well, first of all, think about the fact that stablecoins are the entry point for crypto, right? So if you regulate stablecoins, you basically regulate the crypto market to a certain extent, but still you are already regulating the gates. So, but I agree with you. Stablecoins seem to be the most likely thing that will be regulated both in Europe and in US pretty soon. In Europe, actually, there is this MiCA license that is progressing fairly well. It should be entering in circulation, full force by the 1st of July 2024. In the US, if you see all the new bills that are submitted, you could see that they are always referencing stablecoin and the will of regulating stablecoins.
Did anything in MiCA surprise you guys? Does it change how you have to operate, or do you get to pretty much continue as you were doing?
Well, MiCA is a tricky animal in a way, because basically it imposes a limit of issuance for payment stablecoins, and payment stablecoins definition is not well explained or well defined in the legislation. So, for example, Tether is both a settlement stablecoin, but also can be used as a payment stablecoin, right? So, or like a reserve store of value. So, understanding how to comply with the regulation might be proving quite tricky, and also the limit is difficult to enact, because it will require all the VASPs, that are virtual asset service providers, so all the different counterparties that are accepting, for example, USDT, to communicate to us how much volume that they're making per day, so that we could regulate or limit how much we issue, right? So it's kind of a weird dynamic that we are trying to understand, but it's not finalized, right? So we are voicing our concerns to be a good actor and give proactive guidance. And for us, it's important, of course, to to see in any way the final result.
Yeah, I mean, if it's complicated for you, I can't imagine how complicated it is for them. I would imagine that it's not necessarily them being evil or angry or anything, but probably just don't understand the market well enough. And you're talking about a bunch of bureaucrats, right? So just pass something like that. Are there jurisdictions where you've seen stablecoin specific laws that you find are encouraging, or that could be, copied or mimicked by any of these other regulators?
We are seeing Hong Kong, for example, is making waves, and in general also in supporting crypto. And the timing is interesting, right? So on one side, you get the US, deciding to close on crypto, and on the other side, you see China that initially decided to ban cryptocurrencies. Also, with its connection to Hong Kong, is interesting that Hong Kong is now reopening to crypto. Is in a way allowing crypto in Hong Kong as a testing phase, but also as a way to attract companies with a lot of capital that are in this moment deciding to leave the US.
Yeah, it's a simple way of saying that the United States slammed the door, so China decided to open it, even though they were the country that was banning it. I mean, even today, the Hong Kong government, I don't want to quote exactly who it was, but basically said, or the bankers said, hey, all of those companies, actually, they were telling their own banks to open the doors to companies that were shut out of the United States in the banking system, like with Silvergate and Signature and such. Huge.
Yeah. Yeah. In the end, this industry at its peak was a $30 trillion industry, right? So, of course, you have to put rules because you don't want to attract scammers. But at the same time, if you have open rules that allow the technology to thrive, at the same time to protect individuals, and you embrace this technology, you can create a massive inflow of capital. That is basically what every single nation wants.
Let's talk about you guys buying Bitcoin before I let you go, because that was the other most confusing FUD story that I've seen, where everybody said they're going to buy Bitcoin. It's just like Luna. Right. Anyone with a brain realizes you weren't saying you were going to back Tether with Bitcoin like they did, but I'll give you the chance to explain it, but also more importantly, why you're choosing to buy Bitcoin.
So let's start with how it works, right? So Tether in this moment has around 83.5 billion issued tokens. So and Tether has 83.5 billion in reserves. On top of these reserves, so Tether has kept in the company its profits, the majority of its profits. So far, give or take, as of today, we would have around $2.8 billion on top of the $83.5 billion that we have and need to have in order to back 100% of the tokens. So those, in a classic Silicon Valley company, they would have been already shared as dividends, right? Distributed as dividends to the shareholders. But Tether decided to keep them in the company to further provide stability to its stablecoin. So, and just when I see today these attempts to trying to bring down Tether with some selling in the market, and say, okay, we have even more money than what we should have, right? So, good luck with that. Anyway, we are now in a situation where with the part of the excess reserves, these additional $2.8 billion. Yeah, we decided to buy a portion of it. We decided to buy Bitcoin because we believe that it is a good hedge against all the craziness that is happening in the world. We are Bitcoiners at heart anyway. We believe that Bitcoin is the most liquid thing in the crypto industry, so this is the only thing that makes sense for us to buy. And by someone today reported that BlackRock is even thinking to file an ETF on Bitcoin. So it's the thing that everyone is looking at, right? So Ethereum is there is not really enough liquidity, honestly, to buy it, and we believe that there is nothing like Bitcoin anyway. So we wouldn't buy anything else apart Bitcoin.
We'll talk about a BlackRock ETF another day because it's not like companies have not been applying for those already, but I would bet that if one gets approved, it will probably be BlackRock's. But I know you have to go. You have a hard stop here. I'll say I really love talking to you, but I hope we don't have to do it too soon again.
Yeah. Thank you very much, Scott, as always.
Thanks, Paolo.
That's dope.